Welcome to another lecture in personal finance. I'm Jim Munchback, and I'll be the facilitator today for our students in personal finance at the Bauer College of Business at the University of Houston. So we're about to get started. I'm going live just a couple of minutes early. It is about 9:58 a.m., 25 June, year of our Lord 2024. So we're going to talk it's summer school, so we're going to talk about a lot. We're going to cover several topics. In fact, let me just show you the list. If you're joining on Facebook or YouTube, let's see, it's not giving me the list. Get a few things worked out here on the technology front. And like I said, we're live now on YouTube and the Facebook, but we will start the meeting in 1 minute. In fact, I think I'll go ahead and start the meeting. Give me a little second or two to get the technology going. See if recording in progress. Okay, that's a good thing. Now let me see if I've got looks like I have all my stuff set up. So much challenge when you're me and trying to use technology, kind of pushing the envelope on technology. So far it's working well. I've got great technology. It's not the technology, it's me. Sometimes I get just too many things going. But anyway, it looks good. I'm going to see, hopefully, the students who are going to attend the Zoom meeting will have the correct link. That is one of the challenges I've had. Zoom keeps making changes. Well, I think Zoom made changes. Like now, when you open the Zoom app, you go into a work area. It's a little different. So anyway, the links have been challenging. So you should be able to go to uhzoom.com and find the link to this meeting, which is every Tuesday at 10 a.m. This is the time. This is the place. And I see already. Hope, good, welcome. I'm going to see if I can find the chat. It's one of the things that is. Can you hear me, Hope? Hello? I hear you a little bit. Can you hear me? Okay, cool. Awesome. Hello and welcome. We'll get started here in just a minute, but thank you for showing up and giving me confirmation that you were able to find the correct link, I guess. Cool. Perfect. Finally, that's working. I had trouble getting that uhzoom.com link redirected, but I think I've got it all squared away now. And so, cool. Welcome. We'll give it a couple minutes. Generally don't get started until 5 minutes after. If you have any questions, though, Hope, I'm happy to answer any questions you might have now. Anybody who has questions, now's a good time. I'm going to find the chat button. I'm going to, well, maybe not. Chat. There we go. Chat. There. Okay. Whoa. Okay, we're going to get started here in just a minute. We're going to be talking about bargaining and negotiating. If you're watching on YouTube or Facebook, you'll see that we have some links. There are some links in the video, links to the posts. These are basically the assignment. But it just gives you a little bit more information if you want to follow along. I'm going to scroll down and see, okay, you got to watch out for this. I have to watch out for that. I'll try and make a correction to this. It says BB, which means Blackboard, which is no longer relevant. So this post is a little outdated. I will update it, but it's pretty much correct. If you go into Canvas, your assignment should say upload to Canvas, not Blackboard. So if you ever see that, I appreciate sometimes I get emails and text messages reminding me that I have an outdated piece of content. But anyway, this is just for reference. So we will get back to it. Okay, it's almost time to start. I'm going to go ahead and get started. We're going to cover bargaining and negotiating. That is really in the normal semester, that would be week 7, bargaining and negotiating. So we're going to spend a little time doing that, working on how to bargain and negotiate, and we'll talk about why that's important. The other lesson and assignment that we're going to talk about this week is Insurance 101, which is typically week 8 in the normal semester. I'll tell you again, as I try to remind you every time we get together during the summer, it is a very challenging experience, in my opinion, summer school. I did my best in college to avoid summer school. I had 3 big goals. One, I wanted to meet a girl and get married and start a family, which I did. And I think I shared pictures of my wife, Connie, but that was number 1. Number 2 was I wanted to finish college in 4 years. I was paying for my own college. And number 3 goal was I did not ever go to summer school. I did not want to go to summer school. So finishing in 4 years without going to summer school was a little challenging. I ended up taking 21 hours my senior year last semester. I still have nightmares about that. And I try my best to not make you have nightmares during summer school, but it is challenging and I can't really help that. So we're hitting 2 assignments this week again. And it would be normally week 7, assignment 7, week 8, assignment 8, which is, those are usually 2 different weeks. So anyway, that's what we're going to do today. So let's get started. How to bargain and negotiate. I'm going to cover a few things that I think are important, but I want to tell you a little bit about your assignment in this one, in this lesson, in this assignment, the bargaining and negotiating assignment. So you're going to get to meet this guy here in just a minute. I'm going to just show you. Let's go to this scene right here. That is Ramit Sethi, and he's a guy I met a long time ago. But he did this thing called, his website was I Will Teach You to Be Rich. And I met him at a conference, and he was just a treasure of a guy. Still is. I haven't talked to him in a while, but I've been using this video of his for some time. It's a video that he did for how to negotiate a job offer. So you're going to watch a video, this video that we're looking at now. You're going to watch this video, and I'll just give you a little clip right now.
Made you an offer for $50,000. So Justin, here's the offer, and our salary is $50,000.
Well, first I just want to say I'm very excited about the role. I think first and foremost, I want to be here. This is the job that I want.
So that's just a little clip of what you're going to get to do this week in this assignment. You're going to watch that video and you're just going to tell me what you learned. But you're going to learn in the context of learning how to bargain and negotiate. You're going to learn from Ramit how to negotiate a job offer. And that's what that video is about. And I think it's very helpful. So in addition to that, we're going to go through some of I think over the years I've been teaching this course for a while, and I found there are some basic things relative to bargaining and negotiating that I think are helpful. And so I'll share my top 7 things that I've discovered over the years. But mostly your assignment is to tell me what you're going to negotiate. So let me just show you kind of a list of what you're going to be doing this week. So there we go. I think this will give you the list. Now, this is, again, a list of the things that we would normally cover in this session, in this lecture. So you'll start off in the assignment. I mean, the main thing is that you'll do this interview, you'll watch this interview with Ramit, and you'll take some notes and tell me what you shared or what you learned. You'll share with me what you learned in watching that video. And so I look forward to reading your assignment, your article on that. And then I'll share my 7 top skills, which are listed right here. They're not really a secret. And I want to talk about the first one first, negotiate anything. That is let me just go ahead and jump into that. And then we'll go through the rest of them. It'll be pretty quick because, as always, this time together goes quick. So the first thing I want to talk about in terms of how to bargain and negotiate anything, I want to share my top 7 things. And the first tip, the first kind of essential element, of financial planning is just this mindset. Mindset is kind of important. And so typically at this point, what I would do is, if we were together in the room, in a room together, I would encourage you to answer this question. The question is, if we were together, I would ask, if we were in the room together and I was teaching this course, I would ask the group to separate themselves from this side of the room or that side of the room. And when we talk about bargaining and negotiating, what I've learned, especially from students, is that some folks really like to bargain and negotiate. They feel very comfortable bargaining and negotiating. And because they feel comfortable and they feel like it's something worthwhile, they obviously engage in the process, the art of bargaining and negotiating. But on the other side of the room, and this would be the side of the room my wife would be on, Connie would be on that side of the room, and I would be on the other side of the room I would be on the side of the room with the folks who are like, I love to bargain and negotiate, and I'm pretty good at it. So that's number one, is this mindset. Which side of the room are you on? That's a question I always ask to begin this lecture, just for you to be aware of which side of the room you're on. So I hope in your assignment this week you will tell me, that's one of the discussion questions, is which side of the room are you on? Do you love to bargain and negotiate, or does it seem awkward and uncomfortable and something that you kind of avoid? And the reason that's important is because there's another question I usually ask is, if we took each side of the room and we just kind of measured what difference would it make in your financial life if you were one of the people on my side of the room who loves to bargain and negotiate everything versus the people on the other side of the room who tend to avoid bargaining and negotiating? What kind of difference would that make in your life financially? And so I usually lay out kind of just a very simple scenario and assume that everybody in the room makes $100,000 a year, and we all buy the same basket of stuff. We all have the same expenses: internet, rent, or home. We buy a home, we have a car payment, we have insurance, we have internet, we have phones, we have stuff. So the question then becomes, what difference would it make if you made $100,000? Everybody in the room made $100,000. On one side, we negotiate everything. On the other side, we don't do it because we don't like it, because it's uncomfortable. So what difference would it make financially? And I always ask for a percentage. Like, do you think it's a 10% difference? I think and we don't have time in this session to really process that. But if we were together, that would be what we would spend some time processing. What kind of difference would it make in your life if you developed the skills to bargain and negotiate? If that was something you spent some time and committed to do, what kind of difference would it make in your financial life? And so that's the question. And I always ask for a percentage, and some students say 5%, some say 25%, some say 10%. I kind of like the 10%. So if you assume that it makes a 10% difference, that's 10 grand a year. And over 10 years, that would be $100,000 that I would be ahead of you if you were on the other side of the room and you didn't bargain or negotiate anything. So that's the first kind of tip, the first element that I want you to be aware of is this thing about mindset. Just thinking about bargaining and negotiating from the perspective of you can bargain and negotiate anything. And so that is my number one, is that you can have a mindset like the folks on this side of the room and at least have an open mind about the fact that you can bargain and negotiate so many things that you may not have considered in the past. And that's what I want you to do, especially if you're one of the students that are on that side of the room, the side of the room my wife would be on, folks who just feel awkward and uncomfortable and not very equipped to engage in bargaining and negotiating. If we were together and we had more time, another thing I would ask is I would ask around the room for students to share what are some things you can bargain and negotiate. And so folks would start to share things like their phone bill, their medical bills, their insurance, and then some would say, and then I would ask another question: what are some things you absolutely cannot negotiate? And so this is one of my favorite parts of the session if we were together, because some students would start to say things like, you can't negotiate your groceries, you can't negotiate with Apple Computer. And then other students would speak up and say, well, wait a minute. Like one student said, well, it depends on how you define bargaining and negotiating, but he told the story about going to get groceries, and the way he would take advantage of bargaining and negotiating skills is he would get coupons from HEB, which at the time he said HEB's meat department, they had all these sales, but their meat was just not very good. That was his opinion. I'm not sure if that's true or not. I love HEB. But he would take the coupons from HEB and go shopping at Walmart, where they would honor any coupons, and they had much higher quality meat, according to this student. And so that was one way that he saw the opportunity to bargain and negotiate on groceries, which, not everybody, but most people would say you can't bargain and negotiate on groceries. But if you define and rethink your mindset about what is bargaining and negotiating, if it is something designed, and I don't have a good definition for it, but I think if you think about it in terms of something, a skill, a process, an activity that helps you get a better deal, that helps you have a better outcome financially, then I think that definition that student had for how to use the coupons is a good one to think about. But my point is, I want you to expand your definition, especially if you're a student on that side of the room who doesn't like to bargain and negotiate. So I'm curious what your perspective is about bargaining and negotiating. So I hope you'll think about that and then just kind of make notes about these next few tips. But the number one is mindset, just how you think about the idea of bargaining and negotiating. And if you have the mindset that everything is negotiable, you're obviously going to take advantage of way more opportunities to benefit. So the next one that is kind of, I think, pretty important, and it's on my top list. These are all of these are kind of the result of teaching this topic for years. And I think this one, the developing your walkaway muscle, came from Dave Ramsey, who, if you ever watch Dave Ramsey, and we did for years and years use Dave Ramsey's collegiate material for this course. And when we got to this topic about bargaining and negotiating, it was always it was my favorite part of Dave's perspectives. I watched a lot of Dave. I taught his courses in churches, and got a little, you get tired of hearing the same thing over and over from the same person. But one thing I never got tired of with Dave Ramsey is when he talked about bargaining and negotiating, because the dude was so excited about what's possible when you bargain and negotiate. So a lot of these top 7 of mine, including exercising your walkaway muscle, they come right from Dave Ramsey. So it is an important one. If you ever are in the middle of a negotiation and you demonstrate to the other party that you absolutely have to have this thing, whatever it is, you have no power. You have no ability to effectively negotiate anything. And so if you haven't developed your walkaway muscle, and when I say, it's not just being able to pretend that you can walk away. You actually have to be that person who absolutely can walk away from this deal. That gives you power. That gives you the ability to be more effective in your negotiation. So at that point, I'm going to take just a minute, and I want to talk about this week's class collaboration. So we do this every week. This is somewhat new, but it's not new to this semester. So if you didn't know, and you should know by now, that we have a weekly secret class collaboration. And this is in addition to all of those other things you're commenting on and posting and sharing. That's all part of your class collaboration component in this course. You get 200 points for class collaboration. And so if you miss this secret class collaboration that is not part of the timestamp of this week's lecture, because it's a secret, then you will get a 15-point deduction. So don't miss it. It's super easy. This week, here's what we're going to do. I'm going to play a little clip, and the clip is what I want you to talk about and share your perspective. So here goes the clip, and I'll come back and talk a little bit more about what I'm hoping you'll do this week in this week's class collaboration.
Well, I mean, if you think about it, what is the nicknames that we give the emergency fund? The classic one is Grandma called it your rainy day fund. Why? Because sometimes it rains, and rain is to be expected, so you carry an umbrella, and so that's a rainy day fund. One lady, and we've classically talked about this in Financial Peace University for years, one lady called it her GOK fund, her God Only Knows fund. God only knows what's going to happen.
Yeah.
And because he does. He's the only one that knows what's going to happen. Something's going to happen, though. Life is going to happen, and stuff happens. I saw it on a bumper sticker, and so, you just got to be ready, and you got to go, that's part of it. And it's like saying, my transmission broke, Well, of course it did. It's a transmission. It's eventually going to break. And, that's just, stuff is going to happen. You're going to have things come at you that you are unexpected. And that's the definition of an emergency.
So that's the definition of an emergency. And that's the topic of this week's secret class collaboration, where you get to share kind of what are you thinking about that clip that you just heard from Dave Ramsey about emergency funds. And not only do I want you to share with me about the idea of an emergency fund, and a couple of things I really hope that you'll do and that you'll think about and that you'll actually do. One is in this course in personal finance, I have some goals for you, but they're my goals. They do not matter if they're not your goals. If you do not have specific, clear, compelling goals for yourself, and learning about personal finance and how to wisely manage money. If you don't have goals for yourself that compel you to change your behavior, then you're going to basically finish this course, get your grade, move on, and everything will be the same. And you will not benefit from what's possible in terms of learning a different, better, more effective way of managing money. So everything we do, every lesson is designed with one big goal in mind, and that's to teach you how to become a millionaire by the time you're 50. And so emergency fund is a very small baby step. We generally throughout the semester talk about the 7 baby steps that Dave Ramsey likes to share. Very super simple plan, but the first one is develop an emergency fund. And so I hope you've decided you're going to do that. And if you only have a $500 emergency fund, I hope you've decided to increase that to $1,000. And if you have $1,000 in an emergency fund, I hope you've decided that it makes sense to develop an emergency fund that has 6 months of income basically set aside for emergencies. Now, that's the first part, is just what are your plans? How are you thinking about your emergency fund? That's this week's class collaboration. But in addition to that, what I want you to do, if you have a minute, to just think about and talk about the idea that the way you manage life and the way you manage money, they're correlated. So, for example, this morning I got an email from a student who said they were having an emergency and they wanted an extension on their due date for the assignment. Well, the way this course is set up, I don't give extensions. You get 1 point for a late assignment. And the reason I do that is a couple of things. One is I believe the way you manage your time, the way you manage your life is very correlated to the way you're going to manage your money. And so if emergencies get in your way, and they have a tendency in many people's lives to be kind of a recurring pattern, like what is an emergency for you may not be an emergency for me. And certainly your emergency is not my emergency, for sure. But that's the way, if you pay attention, you'll see so many people live their life from one emergency to the next, kind of like the United States government. It's always an emergency, right? If you watch any politician, they're trying to get your money, raise tax, whatever. That's just life. And so you get to choose how you're going to manage your life and how you're going to manage your money. If you have a real emergency, then you need a backup plan. You need to have an emergency fund. One of the things we do in this course, instead of giving extensions for emergencies, is we give you extra points for turning your assignment in early. It's kind of the equivalent of having an emergency fund where you have money put away so that when an emergency happens, it's really not that big of an emergency because you've planned for the emergency. Just like Dave said, your transmission, of course, it's going to break. Your roof is going to need to be replaced. Name it, whatever emergency you can think of can mostly always be planned for. And now I get it. There are sometimes emergencies that are really life-changing and you can't avoid them. And when those happen, I'm always happy to have a conversation with a student. But usually at that level of emergency, the conversation is more about maybe this is not the right time to take this course. Maybe you need to put your college career on hold because you just faced a life-changing emergency that is going to change an outcome. Again, those are difficult conversations, but I'm just not in. If you want to ask me for an extension on an assignment, the answer is no, we don't do that. But you can get extra points for turning your assignments in early. So that is this week's class collaboration. And I think the next one is, let's see, so we talked about the walk-away muscle already. Let's see what the next one is. I'm going to jump up here and look at the list. So we've got the walk-away muscle, which is just a matter of walking away. Oh, yeah, and the practice of daily discipline, the discipline of patience. Let's see, that's it. Yeah, this is a fun little video. I spend a little bit of time each week trying to find these video clips that can communicate what I'm trying to communicate. Like, that's a dog patiently waiting for a treat, apparently. This is a woman who is practicing the daily discipline, kind of, sort of patience. But in negotiations and bargaining and negotiating, you do have to be patient. And if you're in a hurry, if you have to make that deal right now, it's going to show in the outcome of the bargaining and negotiating. So that is the idea of practicing the daily discipline of patience. So I hope you'll think about that as you think about the whole idea of bargaining and negotiating. That is at least one of my key elements or tips or tools or skills for becoming an effective negotiator. Patience. You have to have patience. This one is comparison shopping, and I know you know. We all know that if you want to make a good deal, you have to compare, you have to look around, you have to see what this product offers, what that product offers for the price. And that's just obvious, I think. And it doesn't matter if you're shopping for groceries or a new computer, or an apartment or a house or a car. All of these things require comparison shopping. And it's just one of my top tips, one of the essential elements, one of the skills that you need to develop if you want to be an effective bargainer and negotiator. It's going to give you more information if you have a negotiation where you're bargaining with someone over something, or if it's just, taking the time to look from one product to the other product to save some money. So that is the next big idea, I guess you could say, for preparing to become an more effective negotiator or bargainer. Next on the list, this one's interesting to me because it is cash is king. Now, I told you a lot of what I learned this semester, a lot of what I've learned in this topic comes from Dave Ramsey. And Dave Ramsey, again, loves to bargain and negotiate. And his idea of bargaining and negotiating is really involves cash is king. So what I mean by that, if you don't know, if you ever watch Dave Ramsey talk about bargaining and negotiating, he uses a funny story about he walks into, I think it's like I think he calls it a big box store. I'm thinking like Best Buy or Conn's or some place where they sell a lot of stuff, and he walks in with cash and he puts it on the washing machine so the salesman will take a lower price for the washing machine. And he talks about how powerful cash is. Cash is king, according to Dave, in bargaining and negotiating. So take it for what it's worth. It is definitely one of my top tips. But here's the way I frame it. Here's the way I think about it. Cash, like you see in this little video, the actual cash thing is kind of old school, and it's not nearly as relevant today as it used to be, because that person at Best Buy could not care less, nor his manager or anybody in the structure of management could care less whether or not it's a cash transaction or a credit card transaction. In fact, probably most places would rather not have cash. They'd rather have an electronic digital transaction. So, but the point is, the reason this is still on the list is because cash, in terms of having purchasing power, in terms of going into a negotiation and bargaining, cash gives you the ability to kind of have the upper hand. If you can purchase something outright instead of having to rely on the terms they give you for credit, you're in a more superior position. So that's really what I wanted you to think about in terms of cash being king, is the fact that it's actually purchasing power that gives you the upper hand in negotiating. So that's cash is king. Next this is one of my favorites. It's silence is golden. So I used to say, in bargaining and negotiating, there comes a time when your silence, where you just stop talking. You say something and you stop talking. That is powerful. And so, since I always said silence is golden, so shut up. It's really helpful. And it maybe sound a little disrespectful, but think about it. One of the things Dave Ramsey taught me and teaches is, and I think Rachel Cruz, who you saw in that earlier clip, they say that when you're bargaining and negotiating with someone, one of the things that you can say, and this didn't make my top 7 list, but it could be, and here's where it would fit. Here's what you say. That's just not good enough. And so, that it could be that term. It could be a number of things you could say in a negotiation where you say what you're going to say, like, that's just not good enough. And then you be quiet. And that's the real key here that I want you to think about is if you're, again, on that side of the room where you don't feel comfortable, you feel like it's awkward to bargain and negotiate. If you're in a conversation with someone who has the ability to negotiate with you and you've done your research and you've prepared for this negotiation, then, that's just not good enough is a really good thing to say, and then couple that with silence. And that is powerful, and that's very helpful. And it will help you become more effective as a bargainer, a negotiator. So silence is golden. So shut up and let's see how that works. Okay, next is timing. And timing is one of the things that is one of my favorites. So I think about car lots. You see a car lot there. I think those are Fords. I'm not even sure what those are. I just grabbed a clip of cars. I looked for a clip of car lots. But I bought a lot of cars in my lifetime. I always buy used cars. And one of the things I've taught over the years is how to effectively buy a used car, because used cars are, you're always going to need a car. And I was a master mechanic for many years. And I learned that, well, I may have told this story about one of the first books I read in college was called The Millionaire Next Door. And in that book, which, by the way, really triggered me it helped me have a paradigm shift, a change of thinking, a change of belief. Because until I read that book, The Millionaire Next Door, I never believed or even thought about the possibility of becoming a millionaire. I just never thought it was something I could ever do. But after reading that book, The Millionaire Next Door, I was convinced that I could become a millionaire in my lifetime. And so I set out to do that because in the book, The Millionaire Next Door, one of the major things they talked about was the millionaire next door who didn't look like a millionaire was someone who took pride in buying used cars and getting a really good deal. Well, I was a master mechanic. That's how I paid for college. And I knew how to find a good deal on a used car. So I thought, you know what, that's like a major element of becoming the millionaire next door. So I'm like, I can do that. And so with all the cars I've bought in my lifetime, I've learned a few things. And one of the things I learned is that timing, especially when you're buying a used car, this is true in lots and lots of areas, but it's really interestingly true when you're buying a car. I bought a motorcycle for myself for Christmas, a KLR 650. I should have a video of the KLR 650. I have one, but I'm not going to go look for it at the moment because it'd be a little distracting. But my point is that I talked to a bunch of dealers. I knew exactly what I wanted, and I started calling dealers at the end of the year, before the end of the quarter, before the end of the year. And I told them, look, I know that you're going to want to get some stuff off your lot because car dealers and motorcycle dealers too, anyone who has inventory, they want to get it off their lot, especially at the end of the quarter when they do their numbers. They're paying money to hold that inventory, whether it's furniture or cars, motorcycles, air conditioners. If they're selling a big ticket item, that inventory is expensive and they want to get rid of it. So timing, if you come to a car dealer at the end of the month or at the end of the quarter or at the end of the year. Each of those timelines make it even more important for that dealer to get that inventory off their lot. And so there was a season, a couple of years, where used cars everything went out the window because of the pandemic. So the inventory on cars, there were no used cars. So none of this worked for a couple of years, but it's worked for 100 years, and it works today. Timing is so important. So think about a car. If you buy a car, a used car, then it is a very important element of bargaining and negotiating. So if you buy a car, you can know that when you're trying to negotiate with the dealer, if you are willing to wait until the end of the quarter, the end of the year, or the end of the month, you're going to get a better deal. There's just no question about it. Timing really matters in lots of big ticket things, especially cars. So now comes the time when you get to tell me, and this is this week's assignment, you're going to watch the video with Ramit Sethi about how to bargain and negotiate salary, a job offer. But you're also in this assignment, you're going to tell me, what have you decided to bargain and negotiate? So that's part of this assignment. That's pretty much it for this segment, and it's already 10:39. So I am going to jump into the next part of this lesson, which is not coming up on my screen at the moment. So let me see if I can fix that. There we go. Insurance 101. That's what we're going to talk about next. Now, again, this is, as usual, one of the topics that we spend a lot of time. We don't spend a lot of time in the normal semester, but we spend more time than we're going to spend today. So I'm going to just kind of highlight a few things. You, this week, are going to have to do some research to learn some of the things related to this topic, insurance. Now, I want to tell you what my goal in this lecture and this topic and this assignment. My goal is to help you become an effective consumer of insurance. So if I had an outcome for this lecture, for this week, for this assignment, the outcome, the goal, if I were to say, hey, I was successful in helping you in this area, that's what the outcome would be. It would be to help you become an effective consumer of insurance. How do I do that? Well, why do I do that is a good question first. Why does insurance matter? Why is it part of this course? Why is it part of personal finance? And the answer to that is really simple, because insurance is a big part of your expenses. Insurance is a big part of your budget. So as you look at your expenses, and I know for most of you, you're not spending a lot of money on insurance right now because you're a student. And so many of you aren't even paying your own insurance. But for those of you who are, this lesson, this assignment is going to be really helpful. But for those of you who are not, this is still going to be helpful because it's going to plant some seeds so that as you move forward in your life, as you become more and more responsible for your financial future, you're going to be able to then start to do some due diligence on the insurance products that you're going to need to manage the risk in your life. So Insurance 101 is really an introduction to a topic that you're going to want to learn about throughout the rest of your life. And I want to give you a few basic elements that will help you become an effective consumer of insurance. That's my hope. So to do that, I'm going to try and open up another chapter of what we're going to talk about. So this is a lot of information, as you can see, and we will definitely not get through all of it. So let me just talk through what's going to happen this week in your assignment as we work on Insurance 101. First of all, you're going to do an auto insurance quote. So the quote itself is well, let me just jump over here and see if I can find the quote. This is the quote. This is the insurance quote section of today's video. So if you look at the timestamps, you'll see that auto insurance quote will be part of the timestamp. And the way we get a timestamp is I push a button and I get a timestamp. So I'm going to do that before I forget. So there's the timestamp for your insurance quote, your auto insurance quote. And this week, what I'm going to ask you to do is get a quote for insurance. And so I'm going to talk a little bit about how to do that, because I want to make sure you avoid a few basic mistakes. Number one is I would not Google insurance quote and just start asking for an insurance quote, because if you do that, what's going to happen is you're going to give them your email address and you're going to get bombarded with emails with insurance agents trying to sell you insurance quotes forever and always. So here's what I would suggest you do. If you have insurance now, and this is for students who, let's say your parents own the vehicle, but you're driving it, it's under their insurance plan. I want you to contact your insurance agent, whoever your mom and dad are working with, whoever you have insurance with currently, contact them to do this assignment. I want you to just get an insurance quote. It doesn't matter what coverages you currently have on your vehicle. It doesn't matter. What I want you to do is get a quote, make some changes, and then learn from the process of getting the car insurance quote. So when you look back over the list of things that we're going to be required this week in your assignment, you're going to choose to either have or not have collision coverage, comprehensive coverage. These are two different coverages in your auto insurance, and I want you to know how they work. I want you to know what they cost, and mainly I want you to understand about deductibles and how deductibles work. So the best way to do that I know of is to get a quote. Just go and make some changes to your policy and then look at the coverages on the quote to see how much they cost. And you'll see that collision probably costs more than comprehensive. However, if you raise your deductible, your collision coverage will go down. Same with your comprehensive coverage. However, if you raise your deductible for comprehensive and collision, you'll notice that your comprehensive coverage doesn't go down as much as it doesn't go down as much for your comprehensive as it does for your collision. So that's the first thing I wanted you to know is you're going to do an insurance quote. I'm in the wrong place. Here we go. The next thing you're going to do is in your quote and in your learning and in your article, in your assignment, you're going to have to understand how liability insurance works. So when you do a quote, or if you just go and research insurance policies in Texas, you're going to see that one of the big coverages is liability. And that coverage has three numbers: a number, a slash, a number, and a slash. And so there's three numbers. I'm just going to tell you what those numbers are real quick. But when you do your insurance quote, you're going to need to understand them a little better. Typically, I tell stories about how liability insurance works. So let's assume that you caused an accident and it involved a school bus and a telephone pole and a milk truck. That's pretty random. But so you caused the accident. The school bus collides with the milk truck. The milk truck rolls over into a telephone pole. And so now you've got all this damage, right? You've got damage to the school bus, to the milk truck, and to the telephone pole. Not to mention the people who were in the school bus and the driver of the school bus and the driver of the milk truck. And maybe there was a pedestrian walking by when the telephone pole fell on them. Now, all of that could make your mind race and think, wow, that's complicated. Hopefully, you're never in that accident. When I was a State Farm agent, clients were always asking me, what kind of insurance should I buy? How much insurance should I buy? What coverages should I put on my policy? And my answer would always be, I'd smile and I'd say, okay, look, I can answer all those questions for you. All you have to do is tell me exactly what kind of accident you're going to have. You tell me exactly what catastrophe you want to insure against, and I will design the perfect insurance program for you. And obviously, nobody can do that. Neither can you. But the scenario I just gave you helps you kind of put together in your mind how liability works. So there are three numbers. I'm going to say 50, 100, and 50. That's three different numbers. You could use lots of different numbers. And when you get your insurance quote, I hope you do that, because 50, 100, 50 is not great. It's more than the minimums in Texas, but 50, 100, 50 is not great. What that means is the first 50, that's $50,000 coverage for any one person's injury. So in the illustration I gave, the school bus, the milk truck, and the telephone pole, if there was a child on the school bus that went to the hospital and had injuries that required, medical bills over $50,000, the most that student would receive from your policy, from your liability coverage, would be what? If you have 50, 150, the first number is how much any one person can receive in total for their claim. So if they had $100,000 medical bills, but you only had 50, 150, that first number is $50,000. So that means $50,000 would be covered under your policy, but the other $50,000 would not be covered under your policy. Does that mean that person doesn't receive any compensation for that extra $50,000? No, that's not what it means. It means you will be responsible for that additional $50,000 for that student who had a $100,000 medical bill. If there are 10 students in the bus, do the math. So that's how it works. That first number is how much the maximum your policy will pay for any one person. The second number, I said 50, 150. Those are three numbers. The first one is how much the maximum is for any one person's injuries. And that could include death. If they died and their estate sued you, if it's a child and the child's parents sued your insurance company, then your insurance company is going to pay out that limit as soon as possible. They're going to write that check immediately for $50,000, and then they're going to turn around and say, we're done. We're not going to defend you in a lawsuit because we paid the limit, so now we don't even have to defend you in a lawsuit. Defense cost is a huge, very important part of liability protection. And your insurance company will pay that defense cost until they pay the limit. If they pay the limit, then you don't receive any more defense from your insurance company. So that's important. 100 or 50, 100, 50, those are the numbers we're using again. So with 50, 150, that scenario with a school bus, a milk truck, and a telephone pole, 50,000 is the most any one person will receive. The next number, can you guess what that is? Leave a comment, and if you're watching on YouTube or Facebook or even in the Zoom room, leave a comment if you know what that second number, 50, 150, three numbers. What's that middle number? It's generally a bigger number than the first number. And that number, 50, 150, the second number, 100, is the amount of the limit of your liability coverage. And that's for everyone, the aggregate, everyone involved in the claim. So again, I'm giving you a crazy scenario with a school bus, a milk truck, and a telephone pole. Telephone pole falls on a couple of pedestrians. Who knows what their injuries are going to be? The milk truck driver, he had some injuries, or maybe it was a she, I don't know for sure, but someone driving the milk truck that rolled into the telephone pole had some injuries, and how severe they are, I don't know. The school bus driver, and there were 25 kids on the school bus. Anyway, all of those people combined, aggregate, total, $100,000 is the maximum your insurance policy will pay if you're at fault in this accident. So that's liability. The third number, the 50, so 50, 150 liability on your car insurance policy. That third number, the 50, is for property damage. So what is property? Property, in this scenario, liability, it's not your property. Liability covers your negligent acts that creates or causes damage for someone else's property or someone else's life or someone else's person. So liability does not cover your car. It doesn't cover your stuff. It doesn't cover you. It covers other people. And the third number, the 50, is property damage. So again, in this scenario, we said a school bus, a milk truck, and a telephone pole. School bus. It's an electric school bus, the kind that Kamala Harris loves. It's electric, which what does that mean? If it's an electric school bus and it was totaled, it rolled and crashed into the milk truck, how much is your policy going to pay for the school bus, the electric school bus, which I don't know if you know this, but electric stuff is way more expensive than ICE stuff. If you don't know what ICE is, you might want to Google that or check out ChatGPT for ICE. It's a strange new term, but it's internal combustion engine. It's the carbon thing, you know. The old school bus had an engine in it that took gas or diesel. The new school bus, the electric one, it runs on batteries, and it's very, very, very expensive. You have $50,000 on your policy, and that will cover up to $50,000 for property damage. If the school bus cost $250,000, your policy will pay $50,000. And who will pay the rest? Remember, your insurance company is going to write that check and send it to the school bus, the school district, $50,000 on a $250,000 bus, and then they're going to send the school district's going to come after you for the rest of the money. And what that means is, even though if you don't have the money, if you're young and you're capable of having a job for the rest of your life, they can garnish your wages for the rest of your life. And that's why it's important for you to understand what liability insurance is and how much you should purchase to protect your assets. So if you have no assets, you might want to rethink that for a minute, because one of the most valuable assets you have is your ability to earn income. And that's an asset. And that's an asset that can get attached to a judgment if you are at fault. So the best answer is be careful. Don't cause that accident. Don't be texting while you're driving. Don't be drinking while you're driving. Don't be driving fast. Don't be driving in a school zone without being super careful. School buses are in school zones quite regularly, really. Milk trucks, on the other hand, I'm not sure. And telephone poles, again, this is a crazy scenario just to help illustrate what those three numbers are, but also to help you understand the importance of liability insurance. So that is liability insurance. Next on our list is this is homeowners insurance. So again, let me jump up here and just look at the list. I've got to go fast, so we're going to probably end it here in just a minute. But you're going to add insurance to your plan, so I want to go and jump into that real quick. And when you add insurance to your financial plan, you're going to add car insurance. You're going to also add home insurance for that home that you purchased last week. So I'm just going to jump in. Man, we're so close to being out of time, but I want to just now go, and I think this is, this is it. So I'm just going to let this play for a few minutes. What you're seeing on the screen, by the way, is an actual financial plan. I think it's Billy. Usually I use Billy's plan. And this is where you can see how to add insurance to your plan. So if you just look at the screen, you'll see what I'm seeing, which is, let me get rid of this distraction there. So this is just where you go to add insurance to your plan. So if you're not familiar with how to navigate through your financial plan, let me just tell you, you go to net worth, profile, net worth, and that's where you can add so many things to your plan. But what you're seeing here is the data card for the insurance. So that's a homeowner's insurance policy that you're seeing right now. And you can see what fields are there, including link to home. So this is where you go. Again, you go to profile and you can add insurance. This is your car insurance. You probably own it. If you have a spouse, you may jointly own it. But anyway, list the vehicle that you put in your plan, just like we're doing here for Billy. And when you do that insurance quote, you're going to know how much it costs for that car insurance. And you're going to put in that, this is the first number of those three where you put in your bodily injury protection. And so just field by field, you're going to put in the amount of coverages that you have on that policy, including your deductible. So don't forget these fields. This is how I'm going to grade your assignment. And so hopefully you'll have no trouble. Make sure you tell me whether or not you have collision and comprehensive. By the way, since you have loans on these vehicles, those will always be checked. So you will always have collision and comprehensive coverage because, again, when we set up your plan, you did get a loan for your cars and for your home. So hopefully that helps. You go to profile, net worth, and that's where you can add accounts, and that's where you will do this. As you can see there on the screen, it's super easy to do, but you do need to pay attention to those fields because when you do your assignment, you give me your screenshots. I'm going to be checking to see that you completed that. By doing this week's assignment in Insurance 101, you will be demonstrating that not only do you know how to navigate your Right Capital financial plan, which is just part of the process, but you're going to demonstrate that you understand a few basic elements of insurance, which is a great start for you to become an effective consumer of insurance, which again is my goal for you in this section, in this lesson, in this assignment, is for you to begin to become a good consumer, a smart consumer of insurance. And to do that, you really need to understand the coverages. You need to understand what's involved and what they cost. And so smart people all around the country get a quote. The man who got me this job teaching at the University of Houston used to be one of my clients, not for very long. And frankly, I was kind of happy when he left. I love him. Just John Lopez. If you're watching, John, I love you, man. He's a super guy. But I was a State Farm agent. He was my client for 5 minutes, and he would get a quote every, at least once a year. Auto insurance, at least at State Farm, is a 6-month renewal. So every 6 months, I think he was getting a quote. I'm like, dude, and he was always interested in getting a lower price. He obviously cared about service and quality of the company, but State Farm never had the lowest rates, typically didn't have the lowest rates. And so anyway, he would always get a quote. And I was like, dude, I thought you liked me. I thought we were, but anyway, the point is what John would tell you is you should get a quote. You should shop around for your insurance to make sure you're getting the best deal. And so he is really the inspiration for this assignment, at least this part of the assignment where I make you get an auto insurance quote so that you know what's involved in your insurance. It's a good idea. And I don't know that you want to do it every year or every time your policy renews, but you do need to do it on a regular basis. Even, and especially, again, let me remind you, I'm not asking you to go out there to the world of insurance agents and ask for insurance quotes from everybody. I'm suggesting, again, very important, I'm suggesting you go to your insurance agent. Now, if you don't have insurance, you're going to have to get a little more creative. You may have to work with your roommate or a friend or a family member who does have insurance and maybe work with them to get a quote. But everybody can get an insurance quote. Everybody needs to know what's involved in an insurance policy, and that's this week's assignment for you in this section. So I am going to let me just jump back up and look to see what we're missing. So we did not get to, let me get rid of that. We did not get to health insurance, life insurance, disability insurance, long-term care insurance, but we did get to adding insurance to your plan. So that's the most important element for today, I think. So I'm going to open up for questions and just give it a minute. I'm going to look. I don't see any questions posted in the Zoom room. So if you do have a question and you're out there on Facebook or YouTube, you're welcome to post it there in the video comment section, and I will see it, and I will do my best to answer it. But if you have a question, again, the best way to get an answer is to jump into GroupMe. Let me see if I can find that. I'm looking for it. I can't find it at the moment, but GroupMe is the best place to go with a question. I get lots of questions. In fact, I got a question just before class started. A student was not able to see the navigation in the, so let me just show you what I'm talking about. The student was not able to see the navigation for getting around in the plan. So the stuff you're seeing on the screen right now, none of that was available to this student. And the reason is because when they're just now getting around to setting up their financial plan and Right Capital, they're just now getting around to it. And because of that, they had to start with the beginning, which is where you set up, remember, you had those 6 data cards that you had to start with, and then you had to hit the complete button. And there's a video on that in Money Study Group. But this student apparently didn't have time to watch that video or even ask the question in GroupMe. Instead, she reached out to me directly with an email. That's the kind of question I would encourage you to ask in GroupMe. And I would certainly suggest you not do it at the last minute, but that's your choice. But I'm not going to be the one to answer that question in the last minute. That's kind of an emergency, your emergency. But anyway, when you don't hit the complete button, you're not going to see all of the data cards that are available to you. They won't be accessible to you until you hit the complete button. And then if the system works the way it's supposed to work, you will have access to all of the data cards that you're going to need throughout the semester to create and build your financial plan. But if you don't hit the complete button, your plan is just sitting there waiting for you to hit the complete button. So that's a question I got just a few minutes before class started. So hopefully that helps. Hopefully this lecture helped. I appreciate your work. It's summer. I feel bad because it's so much work packed into so little time. So good luck. I hope that what you learn this week is something that you can come back to and spend a little more time, because it's going to make a big difference in your financial future. The bargaining and negotiating, that's a great, that assignment is going to be very helpful. And what you learn, but mostly what you practice, is going to help you. Same with insurance. So on that note, I'm going to go ahead and hit the finish button, and I will be looking for questions in Facebook, YouTube, and also LinkedIn. We are definitely posting this to LinkedIn. I think we should be live on LinkedIn and Facebook and YouTube. So please leave a comment, like the video, do all those things that you would do for someone that you wanted to say thanks to. So thank you. Have a good week. I'll see you next week. I'm going to